When a trader opens a short position, they are borrowing shares from their brokerage, which they hope to buy back at a lower price and profit that difference. This provides us with an opportunity. We know stocks move because of supply and demand, and if we can see that a stock has a heavily shorted amount of shares that eventually need to be bought back, we can quantify where demand can come in on a specific ticker. A short squeeze occurs when a heavily shorted stock begins to move up and all those short sellers begin to get stopped out of their positions, thus forcing them to buy the stock, which of course adds to the demand of that ticker. In today's video, I'm going to show you how to build a free scanner that will show you the most heavily shorted stocks in the stock market so you can take advantage of these opportunities. We're gonna come to finviz.com, which is of course a free website. You don't have to even have an account on the site to do what we are about to do today. We're gonna click into Screener, and this is gonna give us all kinds of different filters for how we can screen stocks. But what we're gonna do today is even simpler than that. We're gonna come down to the custom grid, and we're gonna come back up here and turn on our settings so that we can see the types of columns that we want to show within the grid. Obviously, if we make one of them the float short percentage, if I move my head out of the way here for a second, that is going to give us a float short column. And from there, all we need to do is to click on that column twice, sort it from the top down, and we now that easily have a list of the highest percentage shorted stocks in the stock market. I, of course, just showed you how to set up this scanner easily for free, but if you're interested in more scanners of this sort, and or if you utilize TradingView or Thinkorswim and are interested in any custom codes related to those brokerages, head on over to my website, daytradingstrategies.net, link at the top of the description down below. Let's take a moment to talk about what this number here means. The float of a company is the total number of shares minus what is owned by insiders and other institutions. So the current float short percentage of our number one most heavily shorted stock as of today, SPWR, is 294%. But if we click into SPWR, we can see that the shares outstanding is over 175 million, but their float is only 11 million. This thing is 93% insider owned, a lot of institutional transactions. This thing is very heavily insider owned, so their float is only a very small portion of their actual total number of shares outstanding. That allows them to then get this kind of, well, Trey, how is there 294% float short, right? Well, there must be some sort of institutional shorting. There's hundreds of different reasons, and you can put on your tinfoil hat as to why this occurs, but that's what a stock's float is. That's what the float short represents. And going back to the intro, what this means is that okay, first off, I should start with this. It doesn't mean when you see a stock on this list that it's going to go up. Let's actually click back into SPWR here, and let's scroll a little bit out on its chart. Almost every single stock you see that appears on a most shorted list is going to look like this. It's going to be very beaten down. The people opening their short positions looking for downward continuation within weak companies, right? So it doesn't mean just because it's heavily shorted that it's going to go up. But what it does mean, and what you should do, how you should utilize this scan, is that if, say, SPWR tomorrow gets some good news of a $5 billion investment, outside investment comes into the company, this stock jumps from $268 up to $7. You know there is over 25 million shares out there that are currently borrowed, that if a huge move like that happened, would love to get out of their positions, so would come in and buy the stock, right? Remember, that is how a short exits their position, by buying a stock. It's no different than you and I opening a long position when a short exits their position. That, once again, being the entire point of looking at the most shorted stocks in the stock market. If they begin to move up, you know that heavy buying power, heavy demand will come into the ticker. So once again, don't go look at a list like this and go, oh, well, I'm going to buy SPWR, SMFL, or NUKK, whatever. Don't just go buy these stocks. But, Sunday afternoon, you're preparing for the market week ahead. You run a scanner like this. You write these stocks down. You stick them on a sticky note on your computer. And then if you notice throughout that week that any of them begin moving, any of them maybe get some good news, etc., begin making a move up, you now know, hey, this stock is heavily shorted. It has a higher likelihood than other stocks to have continuation in its strong up move, because we know demand is going to come in from the shorts covering their positions.
Trading stocks. He talks about trading stocks. It's important for you Americans and other international individuals to learn about stocks.